Hi, welcome to Market Update for March 29th. Well, after yesterday's action, and just as a reminder, yesterday was T+3 transaction plus 3 days for settlement, the last day to actually trade stocks in the quarter and in the month of March. All of that, of course, had to do with portfolio managers dressing their books, or in some cases, those that were underinvested, looking to make sure to put that money to work before having to report at the end of the quarter. So on top of that, what we want to do is now refocus our energy to the end of the month mark, which is going to be tomorrow on the 31st of the month. Now, why is that important? Well, remember, there are hundreds of millions of dollars in synthetic positions that are marked using futures and options on futures. So the mark tomorrow is almost as important as that T+3 settlement that we saw yesterday. So let's keep that in mind. And more importantly, let's also try to get a feel for what the street is thinking going into the next quarter. A couple of hints out there are already in the offing. Fed funds, for example, are telling us that more than likely we're going to see 2 more hikes over the course of the next 6 to 8 months. Now, that also tells us that the Fed is a little more dovish than thought. Let's pay attention to the yield curve, which seems to be flattening out over the course of the last couple of weeks. That is also a very key indicator going into the next quarter. Remember, all of this is really surrounding a Fed which is trying to be data dependent and find out what data points are either going to drive the next series of rate hikes or have them take their foot off of the gas. This is Jack Barugian from the CME Group in Chicago.